Yeah, it was an interesting day on the market. I mean, we saw that Chinese data out early in the morning, helped support some of the miners, but we saw later in the afternoon, this afternoon, the materials sector actually finishing slightly lower. The official PMI for China coming in at 50.6, up from 50.2, and the HSBC PMI that was released at around lunchtime, second consecutive month above the 50 level as well, sort of up around 12, 13-month highs. So we did see Fortescue in particular, a big underperformer today, down around 3.8%. And despite this sort of solid Chinese data, which might have just missed expectations a little bit, but was still solid data, we saw the defensives and the yield sort of plays take over as the market sort of looked towards the possibility of this rate cut coming through tomorrow. We saw the banking stocks, finance sector perform well. We saw some of the defensives like healthcare, Telstra all performing well. Some of those defensive plays that have good dividend yields in this kind of environment where we've seen the cash rate falling all year and the strong possibility of another cut tomorrow. Investors really pouring into those sectors, trying to look for some income, looking for stable earnings in replace of what we're seeing, a decline in sort of term deposits and online savings type rates.
So Tim, I mean, if we do see a cut in the interest rates, in the cash rate tomorrow, do you think we could set between now and the new year a new yearly high?
Well, I think it's important that interest rates come down tomorrow in terms of the market. There's not another meeting through until February, so there's a lot of talk about the possibility of the RBA waiting till February just for CPI data. We saw that TD securities inflation data coming in at 2.5% today, right in the mid-range of that 2 to 3% band. But certainly lower interest rates would be welcomed by the market in general. I mean, there's many sectors in the economy across retail, housing, construction, exporters, companies that make large amounts of profits offshore that would like to see interest rates come down, and hopefully the Australian dollar come down with it. But the Australian dollar has just remained stubbornly high recently. I mean, if we look back a year from now on the December 7th RBA meeting 1 year ago, we saw the RBA cut rates to 4.25%. Now that's 1% higher than what they are now, yet around that time the Aussie dollar was at $1.03, a level lower than what we're seeing in the Aussie currently around $1.04. And there's certainly a lot of strength in the Aussie dollar because of the demand for AAA government debt, where 10-year sort of bonds in Australia are still yielding over 3% compared to other AAA rated nations which are close to 0%. So the Aussie dollar certainly coming down would be a positive. Certainly we saw that retail sales today figures coming in flat, which is a disappointment. There appears to be a real lack of momentum in retailers at the moment, heading into a very crucial time around Christmas for sales in general. So an RBA rate cut tomorrow, I think the market certainly wants it and it is on the cards, but the question is, will the Reserve Bank actually come through?
Sundance, another hold. I mean, this stock could rival Linus for the most amount of trading holds this year. Quite incredible once again over a hand-long finance deal.
Yeah, well, will this deal ever go through? That's what the market's questioning now. In a trading hold again today, and really the whole time this deal has been on the table, the pricing in the market has suggested serious doubts over whether this deal will actually ever go through. It's traded at a significant discount to the 45-cent offer price for some time now, despite a pretty good run in the stock price sort of recently over the past couple of months. It's still trading at a discount of around 15% to that 45-cent offer. At one stage back in September, it was trading as much as a discount of 40% to the offer price. Now, Hang Lung was supposed to deliver a credit-approved term letter by the 13th of December. Now, they've again delayed that, saying they're not going to be able to make this date now, and they're seeking to change the timetable arrangement around the deal. Sundance hasn't yet sort of responded initially to this yet. It's due to come out of a trading hold on Wednesday, and this deal really, every time it goes into a trading hold, it's just drawn out even longer again. And what we're seeing now is there's been so many hurdles in this deal already, multiple government approvals, there's been financing for Hang Lung on several fronts, and of course the falling iron ore price. The initial offer price was up around 57 cents. It's been lowered twice, down now to 45 cents, following the iron ore price falling back significantly over the time this deal has been on the table. But I think now shareholders really just keen for this deal to get done, if it actually does, to get the cash from this deal and move on, because it has been a very long and drawn out process. And to coming out on the trading hold on Wednesday, unless we get any new good news from the company until then, I think we should see a bit of a fall in the share price.